massive news. Monica, what is it?
Yeah, that's an exciting build-up. Thank you, Frank. Thank you, Arjun, and thanks for having me here. So I'm very excited. I think just a few minutes ago, our announcement crossed the wire. So I'm really excited to share with you a deal we've been working on for some time. So Ripple is acquiring Hidden Road, which is a prime broker. They're a very high-growth prime broker, one of the largest as the non-bank prime brokers, and this is a big deal. It's $1.225 billion.
What does it mean?
Thank you.
What does it mean for Ripple's business? Because you've been on a path to really diversify the business beyond kind of how you started in payments, and there's custody, stable coins now, and so what does this add to the Ripple business?
It's all coming together. So we've talked for a long while about institutional decentralized finance. Many of us here talk about institutions coming into the world of blockchain and DeFi. And this is going to blast that into a new milestone, kind of a new stratosphere. So the idea here is Hidden Road, through its prime broker business, is able to supercharge a lot of what we do. So using Ripple USD, the stable coin, as collateral for all of its prime brokerage services, as well as using XRP Ledger for a lot of its post-trade services. And of course, we've actually known Hidden Road for years because we've been a client of theirs on the payment side to provide FX and those services to payments. So there's many good synergistic opportunities.
Ripple just dropped this article on April 10th. It says how the tokenization of financial assets is transforming financial services. This is a good one right here. And let's start here. The market for tokenized financial assets is expanding at a breakneck pace. The total value of tokenized assets is expected to reach $6 trillion this year and soar to nearly $19 trillion by 2033, a staggering compound annual growth rate of 53%. That is a massive prediction, and it definitely looks like we are on track with all of the things that are happening with asset tokenization. So we're going to go through a few of these things right here. So how financial asset tokenization works. And this is a multi-phase breakdown. So tokenization bridges the gap between traditional and decentralized finance by representing RWAs as blockchain-based tokens, unlocking new liquidity and efficiency gains for financial institutions. A RWA tokenization platform like that of XRP Ledger, XRPL, maximizes these advantages for partners and issuers as they transition through the three phases of tokenized asset adoption. So here it is. Phase one, low risk adoption. This is when banks and investment firms actively onboard familiar products as tokens to test readiness and realize immediate operational gains and stand up basic infrastructure like digital asset custody and issuance. Then you get into phase two, which is institutional expansion, right? So we already definitely are in phase one. Firms often begin to tokenize more complex assets with deeper requirements that can also unlock broader value and gains. Continued momentum depends on clearer regulations, more sophisticated platforms, and a commitment to challenge traditional revenue streams. We're seeing that happening. And then phase three, market transformation. This phase is a system level reinvention wherein traditionally illiquid assets can be tokenized, shared infrastructure becomes the norm, and industry-wide collaboration is standardized, defined by probability. This final phase marks the next generation of finance. So this is really dope. And then the article goes through many use cases and examples. And we'll talk about the real estate one because that's the one that I think people will understand the most. Real estate. Tokenization brings liquidity to nearly 300 trillion real estate market, a notoriously illiquid and opaque asset class, by streamlining transactions and enabling fractional ownership, while institutional grade assets such as commercial properties, infrastructure projects, and large scale property funds are already being tokenized, the continued development of secondary markets will help reduce illiquidity discounts and encourage greater participation. So then it goes on talking about collateral and liquidity management, trade finance and working capital, treasury and cash management, and then different considerations. So this is very powerful. Phase 1, 2, and 3, low risk adoption, institutional expansion, market transformation. We're seeing this happen in real time.